Jai Hind everyone, welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Today I'm going to describe about tax planning under the new tax regime. The 5 important benefits still available. Introduction. The introduction of the new income tax regime has simplified tax calculations by offering lower tax rates in exchange for giving up many traditional deductions and exemptions. As a result, many taxpayers believe that choosing the new regime may means losing all tax saving opportunities. However, this perception is not entirely accurate. While the new regime significantly reduces the number of available deductions, certain important tax benefits continue to remain in place. Understanding these provisions can help taxpayers make informed decisions and potentially reduce their taxable income. Key tax benefits under the new tax regime. First, standard deduction for salaried employees. One of the most significant benefits under the new tax regime is the standard deduction. Salaried employees can claim a deduction of Rs 75,000 from their gross salary income without the need to provide any bills, receipts, or investment forms. This deduction directly reduces taxable income and lowers the overall tax liability. For many salaried individuals, this remains one of the most valuable tax relief measures under the new regime. Second, the deduction on interest paid for let out property. Taxpayers who have taken out a home loan for property that has been rented out can continue to claim a deduction on the interest paid on the loan under the applicable provisions of the Income Tax Act. There is no specific upper limit on the amount of home loan interest that can be adjusted against rental income earned from the property. However, taxpayers should remember that any resulting loss under the income from house property category cannot be set off against income for other heads, or nor can such losses be carried forward to future assessment years under the new tax regime. Third, employers' contribution to a national pension system (NPS). The new tax regime continues to encourage retirement savings through employer contributions to the national pension system (NPS). Under Section 80C(c)(d), two employees can claim a deduction for the amount contributed by their employer to their NPS account. The deduction is available up to 14% of salary subject to prescribed conditions. This benefit is available to both government and private sector employees and can provide substantial tax savings when included as part of an employee's compensation package. Fourth, tax relief on family pension. Individuals receiving family pension continue to enjoy a deduction under the new tax regime. Eligible taxpayers can claim a deduction of Rs 25,000 per year or one-third of the family pension received, whichever is lower. This provision helps reduce the taxable income of pension beneficiaries and provide financial relief to surviving family members receiving pension benefits. Fifth, exemptions on retirement benefits. Several retirement related benefits continue to enjoy tax exemptions under the new tax regime. These include gratuity received on retirement subject to applicable limits, leave encashment benefits as per prescribed conditions, compensation received under a voluntary retirement scheme (VRS) subject to statutory provisions. These exemptions can significantly reduce the tax burden on employees retiring from service and help preserve retirement savings. Key takeaways: the new tax regime does not completely eliminate tax benefits. Salaried employees can claim a standard deduction of Rs 75,000. Employer contributions to NPS continue to provide tax advantages. Family pension recipients remain eligible for specified deductions. Certain retirement benefits such as gratuity leave encashment and VRS compensation continue to enjoy tax exemption. Home loan interest on let out properties can still be claimed against rental income. Conclusion: the new tax regime offers a simplified taxation framework with lower tax rates, but it does not leave taxpayers without any relief. Several meaningful deductions and exemptions remain available, helping individuals reduce their taxable income while benefiting from a simpler tax structure. For selecting either the old or new tax regime, taxpayers should carefully evaluate their income profile, available deductions, retirement benefits, and long-term financial goals. A well-informed comparison can help determine which regime offers the greatest tax efficiency and overall financial advantage. Disclaimer: this article is intended solely for informational and educational purposes. Tax laws, deduction limits, exemptions, and eligibility conditions are subject to change through amendments, notifications, and government regulations. Taxpayers are advised to refer to the latest provisions of the Income Tax Act, relevant rules, and official government notifications, or consult a qualified tax professional before making any tax-related decisions. The examples and explanations provided are general in nature and may not be applicable to every individual's financial situation. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.